Hello and welcome to Energy Insights, your source for the latest developments shaping global energy markets. We are covering today Europe power prices, UAE gas deals, oil and gas market updates, and the energy stocks rally. Today we are covering four major stories that are influencing energy markets worldwide. Number one is that we will cover under the segment one of today's episode. That's the Europe's record electricity price gap between Germany and France. Similarly, in segment two, we have to look into the UAE's $22.5 billion investment in the US gas infrastructure. And under the segment 3, we are looking towards the latest crude oil, natural gas, and refined energy products prices. And in the last segment, that's the segment 4 of today's episode, where we have to look into energy stocks outperforming the broader market. So, by the end of this video, we will understand how these events are shaping energy security, commodity markets, and investment strategies globally. Without any further wait, let's dive in to the segment one, which is the Europe's electricity price gap. Europe is experiencing a historic divergence in electricity prices between Germany and France. The main causes include French nuclear outages, reducing low cost electricity supply, similarly, rising natural gas prices, fueled by the geopolitical tensions in the Middle East, and also by the high industrial demand in Germany, pushing up the local electricity prices. So, what does it result? The largest electricity price gap in recent history, creating volatility in the cross-border power trading and higher costs for consumers and industries. This gap demonstrates the fragility of European electricity markets when critical infrastructure is disrupted. Countries increasingly rely on the grid flexibility, energy storage, and supply chain management to stabilize the system. Traders are taking advantage of these differences, but for everyday users and businesses, this means higher energy bills and tighter energy security. In segment two, we are looking to the UAE investment in US gas infrastructure. A UAE investment firm has acquired 22.5 billion investment in the US midstream gas assets, including pipelines, storage facilities, and processing plants. Why this is significant? The reasons are because provides stable long-term cash flows, grants strategic influence over critical energy infrastructure, and it reflects confidence in growing LNG and natural gas demand in Europe and Asia. So, by owning midstream assets, investors gain control over transport, storage, and delivery, not just production. This trend shows that the energy infrastructure and logistics are becoming as valuable as the resources themselves. This deal also highlights that the global energy security is increasingly linked to strategic investments, ensuring supply chains remain resilient amid geopolitical tensions. In today's episode, segment 3, we have to look into the energy commodity market snapshot. Energy commodities continue to grow strong gains worldwide due to tight supply, high demand, and geopolitical uncertainties. The key figures as of today include the crude oil, WTI crude remain at $104.31 per barrel, which shows an increase of 1.39%. Similarly, Brent crude showed the market price around 107.98, which is almost $108 per barrel, which is an increment of around 0.55% as of in comparison of yesterday's prices. So Tokyo crude remain 114,000 Japan yen per KL, which is an increment of 1.79%. Similarly, natural gas prices remain around $2.93 per MMBTU, which shows an upside take of 1.42%. In case of refined products, gasoline remain 0.54% increment it showed. Similarly, the heating oil also shows upward tendency. 0.29%. Gas oil shows uh, 2.07%. And similarly, 2Q kerosene remain around within increment of 3.7%. Carbon markets also showed upward tendency where the per ton price remained 72.71 euro per metric ton. So these numbers shows that tight supply chains and global instability are creating market volatility. European nations heavily dependent on LNG are particularly sensitive. This segment underscores the importance of strategic energy storage and diversified supply, helping countries and companies manage short-term volatility and maintain energy security. In segment 4 of today's episode, we have to look into the energy stocks and the market performance. Energy stocks are currently outperforming the broader market fueled by rising commodity prices and infrastructure control. Key companies like, in the case of oil and gas, the ExxonMobil, Chevron, Shell, British Petroleum, and Total Energies. In case of LNG and gas infrastructure, Cheniere Energy, Golar, LNG, Equinor, and ENI also shows a good performance resultantly due to these geopolitical tensions. Analysts note that the integration of production, transport, and storage is a primary driver of the value. Companies controlling both resources and infrastructure are better positioned to withstand shocks and capitalize on price swings. This shows that energy equities are no longer just commodity plays, they are now strategic investments combining market exposure with infrastructure security. Investors and policymakers alike are watching these developments as they indicate where future growth and the stability in energy markets may come from. To summarize of today's sessions, Europe's electricity price gaps, UAE strategic gas investment, rising energy commodities, and surging energy stocks all point to new era in the global energy markets. Infrastructure, supply security, and strategic positioning are now as critical as production. And also, the energy is no longer only about resources; it's about managing flows, logistics, and market risks. Thank you for watching Energy Insights. If you found this analysis useful, please like the video, subscribe to the channel, and turn on notifications so you never miss updates on the global energy markets. Thank you for watching Energy Insights.